Hey everybody, Smart Silver Stacker here. Welcome to Friday night live stream. We got a lot to talk about today about the precious metals, the economy, the Middle East. Let's start off with the silver price because there's a nice little move in the price of silver today. You can see here on this chart, courtesy of today's video sponsor, sdbullion.com, had a pretty significant spike up in the price of silver. Now, it's not a huge move, 2.17%, but the notable thing here is that this occurred all at once. And again, it's not really so much the move in silver. I mean, a 2.5% move in silver is nice and everything, but it's not, that noteworthy. But the thing that really was notable about this was what catalyzed this move. And I want to talk about that, not too much, but fairly extensively here because this is important. This is the jobs report that was released today from the Bureau of Labor Statistics, the non-farm payroll report. This is what is driving market action here, and let's get into some of the details here because this was not a great jobs report, to say the least. As much as the current inhabitant of the White House likes to get up in front of everyone on, YouTube and on television with a whiteboard and tell us how great Bidenomics are, the cracks are starting to show here, folks. And, it's one of these bad news is good news kind of dynamics. Now that this terrible jobs report came out, investors seem to be convinced that the Federal Reserve is done hiking. But let's talk about this jobs report and why the price of silver rose. So first of all, basic data, 150,000 jobs added. You can see that here on the front page of the report. Now that is a pretty weak jobs report. That is below the 180,000 jobs that were expected to be added. And this is the second lowest job addition since the COVID shutdown. So bad jobs report. Now, let's talk about the details here because it's worse than just not a lot of jobs being added. 51,000 of those 150,000 jobs were government workers. So, debatable as to whether or not, those folks are going to be adding anything to the economy. Very likely they will actually be inhibiting folks in the private sector and, their contributions to the economy, I think, are questionable. Thank you, Constitutional Stacker. Appreciate the super chat there, sir. Now, we lost 35,000 manufacturing jobs. So, let's see. We've got 51,000 government workers added, 35,000 manufacturing workers removed from the labor pool here. In addition, the August and September numbers, those were revised down collectively. 101,000 jobs. So not looking good there either. It's not just this month that was weak, as has been the trend with these jobs reports under the Biden administration. They were revised down. The majority, I think 8 out of 9 of the past job reports have been revised downward. So what are the odds, right? Multiple job holders also, this is interesting, hit a record high of 8.5 million. So, we've been hearing a lot about how strong the economy is, how tight labor conditions are, how many people are employed. Well, a lot of those people, a record number of them, are just individuals who are holding multiple jobs and trying to get by in this economy that has been ravaged by Bidenomics and inflation. So, yeah, not good, folks. And so, all of this, it's bad jobs report, again, it's the bad news is good news thing, seems to have investors convinced that the Fed may, in fact, be done hiking. Now, let's take a look at the 10-year yield here. So the 10-year yield getting a very strong bid today, the 10-year bond dropping 2.5%. Remember, as the yield on the 10-year bond declines, that indicates someone is coming into this market and buying it. Let me know in the chat if you have some thoughts on who that might be. But again, this is perhaps investors believing that looser monetary conditions are to come. And they may very well be correct. But the thing is that if the Fed decides to pause now, I mean, the inflation fight is not done, folks. The fiscal policy, they just told us that they're going to be borrowing another $1.5 trillion this quarter and next. That is all going to be spent into the economy. We are on the verge of war, which will be highly inflationary. And the fight isn't over. I mean, inflation is still well above the Fed target. Someone in the chat there says, I was hoping you would tell us who is buying. Well, I mean, listen, lots of people buy U.S. Treasuries. Investors buy them. Foreign powers buy them. I mean, to a lesser degree than in the past, certainly. You've got China and Japan largely dumping their Treasury holdings, but, institutions buy U.S. Treasuries. There is still a perception that U.S. debt is the safest safe haven around, although, I would have something to say about that. I think maybe there are some alternative assets that we could be looking towards as safe havens, and ultimately, I believe that will be the case because, this sell-off or I'm sorry, these decline in the yield, so actually not a sell-off, but a buying spree of U.S. debt, I believe will be a temporary phenomenon. And the thing is that as inflation continues to rise, this rate will likely continue to go up regardless of what the Fed does with the federal funds rate. Because, in the past, when the Fed eased policy and stuff, inflation wasn't really that high. But now inflation is very high, well above the Fed's 2% target. Excuse me, a little under the weather today, folks. And when inflation is very high, yields on debt will have to rise correspondingly because if you got inflation at, 10%, let's say, just a nice round number, who's going to buy a 10-year treasury for 4.5%? I mean, a guaranteed loss of 5.5% every year. So, inflation, as it continues to move up, will be driving the yield on U.S. treasuries much higher. And again, that's more or less guaranteed by the fact that fiscal policy continues to be just so out of control and there's so much borrowing. Now, I don't know that the Fed is going into the market and buying here. There's a lot of speculation to that extent. Officially, they're still selling bonds via quantitative tightening. And that's entirely possible. Investors like individuals, retail investors, although, I mean, I don't know about you, I'm not buying bonds right now, but, some folks probably are, in institutions. They see this terrible jobs report. It's the same thing we've been seeing for years now. This bad news is good news. Dynamic stocks were up today as, investors think that, well, the economy is starting to fall apart because of this terrible jobs report, and that means that the Fed is probably going to ease. And listen, we're on the verge of a large regional war in the Middle East. Certainly, if a war breaks out, I think that there's a strong possibility the Fed could use that as cover to ease because they're going to need to ease because there's going to be a lot of borrowing, a lot more than $1.5 trillion that's going to go towards war spending in Ukraine and in the Middle East, et cetera, possibly even over in Asia, should hostilities there break out in any of those hotspots. You got the Taiwan situation, you got North Korea. So I think that the Fed very well could be near a pivot point here. They may very well decide that they want to ease in the very near future. And, not least of which is because the financial system in the U.S. is on the verge of collapse. We've got commercial real estate mortgages defaulting at a very high pace as the yield on the bonds has been increasing. Banks have been coming under increasing pressure because of their portfolios of low yielding government debt. Someone's asking how many of these Napoleons did I get? Just one. Let me know in the chat if anybody else picked up one of these awesome Napoleon rounds, or coins, actually. It's a coin from Liberia. I've got some Scottsdale silver on display for you today, folks. We got the Kit Kat bars. I think they officially call those their CL20s. I got the 10-ounce stackers. I love these things. They're like little Legos for us stackers. Pretty fun. And then they made this awesome one with SD Bullion, this Napoleon coin, the first in the series of their Commander coins. I think the next one's going to be Patton. Certainly a hard-charging individual. It would be interesting to get the take of these historical figures on the current situation, don't you think? Now, all of this, the Fed potentially pausing, inflation likely to run out of control. This is why I continue to stack gold and silver, and I'm not the only one. We've got the Economic Times here reporting that central bank gold purchases are at a record for January to September. So outpacing even last year. Gold purchases by central banks surged to a record high of 800 tons between January and September amid sticky inflation in the U.S. and Europe's richer nations and mounting geopolitical uncertainties. The Central Bank of China, Poland, and Singapore are among the largest buyers, leading to a 14% year on year growth. That's from data from the World Gold Council. So, central banks understand what is playing out around the world here, and they're stacking gold at a record pace. And so, I'm going to continue to add hard assets just like them. I would say, whatever you want to say about central banks, they're not the dumb money, right? Do me a favor. We've got 139 people watching and 34 likes. If you could all smash that like button, that would get us over 100 right now. I would love that. That would be fantastic. Thank you all so much. Appreciate you joining. Now, China has increased its gold holdings by 181 tons throughout the year and now holds 2,192 tons in its reserves. That's the official number. Of course, there's a lot of speculation that China holds significantly more gold than that. Extremely possible. They're the world's #1 gold producer, and also a large importer of gold. So, I think they've probably got a lot more gold than that, but we won't know until a time of their choosing if that is the case. All right. Now, there was something very interesting regarding these gold purchases, specifically Poland. Now, this is from Schiff Gold, Peter Schiff's blog. Central banks on course for colossal year of gold mining, but specifically, he included in this post a very telling quote from the Bank of Poland president, Adam Glapinski. I think I'm saying that right. Now, currently, Poland holds 11% of its reserves in gold, and he said, "This makes Poland a more credible country. We have a better standing in all ratings. We are a very serious partner and will continue to buy gold. The dream is to reach 20%. All right, that's interesting enough. But this, I thought, was far more telling. This thing that he was quoted as saying, Adam Glapinski, head of the Polish central bank, "Gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records." Interesting, he says when someone does that, right? Not if. But then he kind of clarifies, "Of course, we do not assume that this will happen, but as the saying goes, forewarned is always insured, and the central bank is required to be prepared for even the most unfavorable circumstances. That is why we see a special place for gold in our foreign exchange management process." So, that is very interesting, I think, that you have the head of a central bank acknowledging that there is the possibility that someone could cut off power to the global financial system and not only disable, but destroy traditional assets based on electronic accounting records. Can you imagine that? Can you imagine if there was a cyber attack launched that just erased all of the information at the financial institutions? Who would have any money then? What would you have to be holding to still have money in the event that all the digital markets were destroyed? What do you think? What do you think you'd want to have? Of course, it's precious metals, because there's no counterparty risk there. And, I'm not saying this is going to happen. In fact, I didn't even bring this up. It was the head of the Bank of Poland, who is warning of this. But, I see some folks in the chat pointing this out. On that note, this is an interesting story that we got today. Deposits delayed at multiple banks. Bank of America says. This is like a local news outlet, originally by the CNN news source staff. But yeah, Bank of America alerted customers on Friday that some deposits may be temporarily delayed due to a problem impacting multiple banks. The company assured customers that their accounts are secure and balances will be updated as soon as deposits are received. Okay, Down Detector, which tracks the status of various websites and services, reported customers at Bank of America, Chase, U.S. Bank, Truist, and Wells Fargo all complained of issues on Friday morning. So, they're telling us that this is a glitch with the TCH, that's the clearinghouse. I guess that's a bank system. They tried loading an ACH file, or automatic clearinghouse file, which contributed to this delay. But yeah, as Constitutional Stacker says in the chat there, all the worst banks. Weird, right? Yeah, very weird. Do me a favor. If you are concerned about deposits in U.S. banks, smash the like button right now. I want to see how fast it ticks up because this should be very concerning. We are in the midst of this fifth generational warfare. We already know there's been cyber attacks on Israel, on several, even Palestine. They've had cyber attacks, although the internet is pretty much completely down in Gaza now. But I think that's just the initial phases of a broader systemic problem. If we see this stuff kick off in the Middle East, if we get a broader regional war, expect possibly kinetic problems here in the U.S., but also very well could be cyber threats, and that could cause more chaos than anything kinetic. Thank you, Constitutional Stacker, who says, don't put it in the bank, put in silver. Yeah, I agree. I mean, I do have some money in the bank, of course, but always good to be diversified. And if you're holding all of your assets in electronic form, in a stock trading account or a bank or something like that. Look, I don't give financial advice, but I think the writing's on the wall here, and you might, yeah, some in a credit union, but still, those are digital files at the credit union. So, you got to be circumspect about where you are holding your wealth these days. Thank you, iReview. I appreciate that, sir. What do we got there? A little bird fist bumping. Cool. Okay. Now, to wrap things up, I do want to just give a little update on what's going on in the Middle East. I know that's something we've been covering a lot lately, and every day there are developments there. And, before I do, I just want to share a little speculation on my part here about what's going on in the Middle East. I really do believe there is a significant threat of a broader regional conflict breaking out here. And, what do I know? I'm just some guy on the internet, so take this all with a huge grain of salt. But listen, the Middle East, I think what's going on here is that all of these players are just kind of seem to be waiting until they get all their assets in place. The U.S., we've got the USS Dwight Eisenhower transiting the Mediterranean, heading to the Persian Gulf via the Suez Canal. And, I think that may be one of the reasons we're asking Israel to, have these humanitarian pauses to see if we can get these assets in place before, the shizzy really hits the fizzy. That is a Canadian prepper reference, by the way. I know some people have commented on that. It's just a turn of phrase I borrowed from them that I really like. But listen, things are not looking good. So today we got a speech from Hezbollah's leader, this fella right here, Hassan Nasrallah. And this was a pretty invective speech from this individual. The Hezbollah leader said that his powerful militia is already engaged in unprecedented fighting along the Lebanon-Israel border. Now, we reported yesterday that there had been, I think, 13 attacks they had launched on Israeli positions using guided missiles and guided rockets. And there's speculation that the Wagner Group may be transferring Russian-made SA-22 anti-aircraft systems to Hezbollah. And again, this guy, Hassan Nasrallah, in this speech, he did make some threats against Israel, but he refrained from, declaring all-out war against them. So Iranian officials always look angry. Yeah, he's got kind of a sourpuss face, doesn't he? But, rightfully so. There's some very serious stuff going on in the world right now, and, he probably has some reasons to be sourpuss at this point. But this could be a huge problem for all of us if Lebanon gets involved. And again, I think that they, just like the U.S., are kind of biding their time until perhaps they get these additional assets in place, whether it be from the Wagner Group or from Iran, who has been training and arming Hezbollah. These really are just like Iranian proxies. I don't think that's a secret or propaganda. That is a fact. And let's see. He says that despite the fact that the U.S. is moving warships into the region, he says that this will not scare us, quote. And he says Hezbollah is prepared for all options. that they can, quote, resort to them at any time, and that the fighting will not be limited to the scale seen so far. Okay, so yeah, they're firing more rockets. They're continuing to escalate conflict on the Lebanon border. Now, of course, Israel has threatened to turn Lebanon back to the Stone Age should Hezbollah get involved. And that actually was back in August before any of this kicked off. So, there's lingering tensions between Israel and Hezbollah. They went to war last in 2006, but since that time, the militia group has become much larger, much better armed, much better trained. It's not really the same story, and so, you know, uh, if a bad jobs report has this kind of an impact on the price of the precious metals, imagine as this conflict escalates, what that's going to do to markets. We get 150,000 jobs added instead of 180,000, and the markets have these huge shifts. Again, imagine what's going to happen when Israel pops a nuke off to defend themselves from Hezbollah fighters, or a hypersonic ballistic missile from Iran smashes into a U.S. carrier. Now, obviously, I'm not hoping for any of these events. I would prefer the price of silver go to $10 and the price of gold decline significantly and the U.S. economy prosper and cooler heads prevail in the Middle East. But I just don't really see it happening, folks. And these are not things that we want to disregard and just bury our head in the sand. So right now, the Israeli military has said that 7 soldiers and 1 civilian had been killed on the northern border as of Friday. More than 50 Hezbollah fighters and 10 militants with allied groups, as well as 10 civilians, including a Reuters journalist, have been killed on the Lebanese side of the border. And, those numbers may seem very minimal in comparison to what is coming. Netanyahu has said, "Don't test us. A mistake," he said, "will exact a price you can't even imagine." This is in response to this speech from the Hezbollah leader. So, look, I'm not saying that there's going to be a broader regional war breaking out tomorrow, but it's not outside of the realm of possibilities. And when that happens, you're going to watch the price of commodities soaring. There likely will be significant problems with global oil supplies. The Strait of Hormuz could potentially be blockaded, shut down by the Iranians. There's a lot of things that could happen here which would be very disruptive, and I don't think that markets really are pricing that in. I mean, what we saw today was just this wave of optimism. The stock market, all the major indexes were in the green today. People going into the market and buying bonds. Some of this could be due to the fact that there's a lot of liquidity it's about to be pumped into the system as a result of this warfare. We'll probably get another GDP print if we get warfare breaking out, but it's not going to be good for inflation. All signs right now are pointing towards massively higher inflation, if you ask me. I mean, if we get a Fed pause, if we get a broader regional conflict, inflation is going to soar. It's going to be a real problem, and got to get prepared accordingly. So let me know what you think in the comments down below, folks. Stay safe and happy stacking, everybody, and I will catch you next time. Smart Silver Stacker, out.